Hello and welcome to Crypto Weeklies. Today we discuss Bitcoin. We'll conduct machine learning based price forecast as well as look at the recent price action, retirement related model for Bitcoin, and estimated bull run peak. None of the content is financial advice. So let's get started. The price of BTC is right now at around 96k. From the bottom, if we look at the current price from the market cycle bottom, it's up by about 500% or 6.2x from the lows. At one point it did go as high as about 7x from the 15k low to 108k almost at its current market cycle peak. So right now the price has taken a breather. If we look at some of the key levels, if we apply moving averages to here and have this is the at a daily level. If we go to the weekly view of this chart and reset it a bit, we'll get the following details. So in this weekly view for Bitcoin, again the moving averages right now for the 20 week and the 21 week are somewhere between slightly under 88k and 87k, but in the next week they could be close to 90k. So if let's say the price stays in this area and gets close to the 20 week simple moving average or 21 week exponential moving average, if the market conditions favor a rally, we might get a second leg from that point in time. Again, Bitcoin did touch 20 week in June 2023 and then bounced again in July and August. It did go slightly below the 20 week and 21 week and then again had a bounce. Similar story for in 2024 from July till October. It was quite close to the 20 week moving average, and then it did have a bounce. Let's see if this pattern repeats. In terms of the retracement, Fibonacci retracements from the last market cycle top at around 69k till the bottom of around 15.5k, Bitcoin did make its way to the 1.618 fib level. That was at around when the price reached higher than 100k. 100k, that is to be precise, at around almost 100k and $900. The next target for Bitcoin per this regression for this polynomial, the Fibonacci level analysis, is coming in at around 153k. That would correspond to the 2.618 fib level. So that is the current target in mind per the Fibonacci levels. So let's check the machine learning side of things, if the and what the models predict. This is the weekly price action for Bitcoin since about 2014. Based on this price action, this machine learning model is trained on that and provides the following output in a graphical as well as in tabular format at the bottom of the screen. First, we'll look at the graphical view. The directionality related forecast is in this pink line. That means if all things are equal, the likelihood of Bitcoin's price going higher with time is higher than going lower with time. That has been the case as Bitcoin has reached 100k from its modest beginning of less than $1. So again, if all things equal per the directionality model, in the next 6 months the price could be between 96k and about 109k. The magnitude or the actual price doesn't matter. It's in terms of percentage. If we look at the percent shift on the directionality based forecast, again it says that between 10 to 20% appreciation in the asset price. If there is a bull run with a non-euphoria bull run, by that I mean a bull case at around 68 percentile or 1 standard deviation confidence level applied to the base case, that bull run peak for Bitcoin in the next 6 months could be between, per the machine learning model, could be between 101k and 151k. So quite close to this 2.618 fib level at 153k. So there is some sort of a confluence. That is, if Bitcoin does not visit any euphoria or the market cycle does not have a euphoria case like it did when the last pre-halving year, or the post-halving year began, when price grew from about 33k to about 61k. That was kind of a euphoria phase in the market. If on the other hand, this time around there is not the euphoria case is not there, in the next 6 months the price in that bull case could be somewhere between 100k and 150k. If on the other hand there is a euphoria in the market, the machine learning model says that with 2 standard deviation or 95 percentile confidence level, the price stays within 107k and slightly above 203k. So if you go back to the Fibonacci level again, the 3.61, it is fairly close to that, around 206k. So on the other hand, if there is a sell off in the market in the next 6 months, the one standard deviation support to the downside between 77k and about 91k. And these values again in graphical format are also available in tabular format at the bottom. The pink line, which is the base case, is this column in the middle. To its left are 3 bear scenarios for each week and 3 bull scenarios for each week based on the seasonal ARIMA and LSTM based model. Now let's focus our attention on the retirement related model for Bitcoin. Again, the price of BTC right now at around 100, roughly speaking 100k. Let's take the bull case per this model and let's try to analyze that bull case. The 30% bull case is the scenario that we have considered is that, and Bitcoin grows 30% year over year in all of the non-bear market years, that is 3 out of 4 years in the Bitcoin's 4-year market cycle, and has a decline of about 30% every bear market year. Again, where are we getting this data from? This is the historical returns for Bitcoin. Again, if we start with 2020, that was the last halving year for Bitcoin. The second last halving year, the last halving year was in 2024. So let's start with that. Between that is the cycle with that analysis, with 2020 coming in at around ROI or return on investment or growth at around 300%, 2021 at around 60% year to date ROI towards the end of the year, 2022 a decline of about 65%, that is one bear market year, 2023 the 4th year, which is the pre-halving year, growth by about 154%. Now let's say the cycle resets in 2024, the 4-year completion from 2020. In 2024 the growth was at around 100%. If we take this forward and with some sort of a diminished volatility, assume that Bitcoin grows only 30% with a base which starts in 2025, towards the end of 2025, with 200k as a target for 2025. In 2026 this does a decline of about 30% at around 140k. Again, we are trying to take out the noise from the equation and try to focus on the signal. Again, the eventual peak could be slightly higher, the eventual bottom could be slightly lower, but the general sense of the directionality at an average level in 2029, if that 3 years of 30% growth is achieved at an average after the bear market, the 2029 peak could be somewhere at around 300k, 2033 peak at around 500k, 2037 peak at around 750k, and 2040 at somewhere at around 850k. This is the 30% or the Uber, not the Uber bull case, but a bull case with about 30% growth and 30% decline. If on the other hand Bitcoin, again the number of Bitcoins needed in that scenario are as follows. If Bitcoin does go to 200k this year, less than 5 Bitcoin would make a Bitcoin millionaire. Again, this is calculating how many Bitcoin are needed to be a millionaire. If 2029 the price does go to that target of about 300k, the number of Bitcoins needed is at around 3.25. If 2029 the price goes to that about slightly under 500k, the number of Bitcoins needed is 2 Bitcoins makes you a millionaire. In 2037 1.3 Bitcoins make a millionaire. In 2040 slightly above 1 Bitcoin makes one person a millionaire. Again, not financial advice. In the Uber bull case though, slight difference with the bull case and the Uber bull case. The assumption is Bitcoin grows at 45% year over year and has a better bull market in 2025, that is at 80% growth instead of 60% growth from the June top at 250k. 2026 roughly declines to about 40%. Again, if the asset grows at a rapid rate, the declines could also be sharp, as they were the case in the prior Bitcoin cycles. Let's say 2026 average is at around 150k. 2029 price at an average goes to 450k. 2033 800k and 50k. 2037 1.5 million, and with that 45% growth model, 2040 ends close to the 2 million target. So That's and in that scenario, the number of bitcoins needed go down significantly in 2026, less than 4 bitcoins, or towards the end of 2025, less than 4 bitcoin makes a millionaire. 2029 slightly above 2 bitcoin, 2033 slightly more than 1 bitcoin, 2037 0.65 bitcoin, and in 2040 even half a bitcoin makes a person a millionaire. Again, you can check out these scenarios at your own leisure. Again, all of the content on this website is available for free. You don't have to pay or sign up for anything. In terms of the regression based valuation for bitcoin, the fair value per the polynomial regression analysis, this pink line helps establish if the price is undervalued or overvalued with respect to the fair value, which is this pink line. Again, DCing below the pink line, especially if you apply one standard deviation residual to the pink line, that is this green line. DCing around this green line level has been a great time to buy. Again, historically speaking, in November 2022 the price did go sub 17k when this regression green line was breached. Again, in the next bear market, again in the last or the 2018 to 2019 bull bear market, the price did go below the 2 standard deviation residual. This time did not touch the 2 standard deviation residual, but barely scraped the 1 standard deviation residual. Next time around, maybe due to the decreased volatility, DCing below the fair value or somewhere as a midway point between this pink line and the green line could be beneficial in the next bear market. Again, not financial advice. If you want to know these undervaluation zones, you please give us a like and subscribe to stay updated. Right now, the fair value of Bitcoin with respect to the polynomial regression based fair valuation is at around 107k. That means Bitcoin is undervalued by about 10k when the price right now in this week is coming at around 96,000. If on the other hand, if we look that in the peak territory of the bull market, the price has a 1 standard deviation residual. When the price has this 1 standard deviation residual applied to upside, this yellow line, which is the non-euphoria peak per the with the same color code that we use throughout all the charts, the yellow line does represent a non-euphoria bull run peak for Bitcoin. If you notice that in March of 2024, that 75k roughly speaking was the 1 standard deviation peak, non-euphoria bull run peak. The price did go to that level but failed to meaningfully go above it. That means that at that point in time, whatever the bull run managed to achieve was a non-euphoria bull run peak. That means if that downturn did highlight that the bull run was not over and there would be a higher peak somewhere in 2024 and 2025. So that 2025 bull run peak with a non-euphoria case is coming in at around 175k. If on the other hand there is a massive hysteria in the market, the 2 standard deviation bull run peak is coming in at around 277k. Again, this comes with a caveat that in the last or the 2017-2018 cycle, the price did go to the 2 standard deviation residual on its eventual bull run peak, slightly higher than that red line. In the last cycle in 2021, the price did not go anywhere near that red line but managed to just scrape the orange line. So this time around, again, as the asset class matures, again going to that much overvaluation is very hard. Again, nothing is impossible, but again, realistically speaking, the eventual bull run peak could be somewhere, again, if these trend lines were extended by 4 to 6 months, could be somewhere north of this yellow line, but way short of this orange line. Again, as if you take an associative property throughout the bull runs, again, if we apply that logic, we could say that a midpoint between that orange line and the yellow line, somewhere closer to that yellow line, could be the eventual peak for Bitcoin per the regression based model. So somewhere between 177k and 200k per the regression based analysis. If we look at some of the other models, the risk based analysis of the daily price. This is the DCM model, takes into consideration the same regression based line that we saw. Instead of in a pink color, this is in gray color, and based on the relationship between the price and the regression line with time adjusted and volatility adjustment risk levels, the levels are normalized between 0 and 1 and color coded to understand some of the best times to DCA whenever the risks are in the cooler shade of blue, and opposite is getting out of the market whenever the risks are in the hotter shades such as yellow, orange, or red. The highest that we went this cycle was at around 62% risk back in December 17th 2024, when the price was at around, roughly speaking, daily average at around $106,000. Again, the risk level in the last year were far higher than that point in time. Again, in 2024, if we look at March of 2024, the risk levels were at around 76%. The risk color code were also in, or in this yellow color again, which signal this heightened risk level than this green color. So although the price was significantly lower, the deviation from the regression line was higher. If you look at the fair value at that point in time was at around 46k, the price went to 74k, whereas over here the fair value and the deviation from the fair value was less. And again, this is percent adjusted, so we do not expect the similar deviation to go on forever. Again, that is assumed that as asset reaches some maturity level, the deviation would not be as high as before. So those things are factored in this analysis. Again, right now the risk levels are at around 48%. So roughly speaking, 50% risk, 50% reward. Again, that also that can also be justified by the machine learning based forecast at around 200k. If the price right now is 100k, that means this completion is at around 50%. So if we look at some of the moderate targets for this regression based approach, again a confluence at around 170k, that's when the market gets heated per this risk, that 50 per the risk and price corresponding analysis. 50% risk exceeds above 170k, and the higher end of the risk is at around 240k. That's where the market does get too highly overheated for this interpretation of this model. Again, the maximum permissible risk based value for Bitcoin is coming in at around 312k. Again, as we are going towards the end of the bull run, that is in late 2025, if the risk levels are again at that point in time getting, the price is close to let's say the risk band of 50%, then going beyond 60-65% would be very impossible, because again there is a time component to it as well. In 2026, the likelihood that the prices go low with time, historically speaking, are higher than going high with time. You can see that in 2018, whenever the 2018 the year 2018 began, the price only went down with time. In 2022 as well, when 2022 began, the price was already going down again. The peak was in November, so in starting December, January, the price had only one way to go, that is down. So that is also something to be content with. If we look at the composite of all the for all the risk based model that we have, the regression risk is low at this point in time. The SMA risk is high, the time weighted average price risk is high at around 85%. The SMA risk or the simple moving average risk is at around 47%. The weighted risk is about 41%. That provides an estimated bull run peak for Bitcoin. That's the higher end of the estimated bull run peak at around 225k, which is a composite of all of our non-machine learning based models, providing a reward of about 2.3k from the current price of about 96k. And with that, I would like to conclude the video. The last thing that I would like to show related to Bitcoin, again we can remove ETH from this analysis. This is how the price of Bitcoin is doing with respect to the 20-week moving average, and per that relationship the risk levels are identified. Again, this is the risk score between 0 and 1 based on the time of the market, as well as again takes into consideration the Bitcoin price at this point in time. The highest that we went this cycle was in December of 2024, where the risk briefly peaked into this highest risk band at around 80-81%. Right now the risk levels have plummeted a lot. The risk for accumulation of Bitcoin is at around 45%. Per this model, again, if we enter this, there is no guarantee. If we enter this low risk, that is below 40% risk, that is one decent buy zone. Again, we did witness something similar in March of 2024 when the price of Bitcoin was at around 74k. It did eventually reach that sub 50k at one point in time. That time the risk went to this 16% or the lowest risk score, that is between 0 and 0.2 risk. That was a great time to buy per the model. And with that, I would like to conclude the video with saying that right now we are somewhere in the middle of the rally, 50% completion. So let's look at if there is a trend reversal in the coming days. If there is, this could be a moderate risk or a 50-50 place to get in or get out of the market. With that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.